Have you ever wondered how the rich achieve financial freedom? This question lurks in the minds of many, prompting an unending quest for knowledge, and strategies to attain financial stability and independence. The answer isn't as elusive as you might think. The wealthy leverage several assets to build their empires, and in this video we will delve into 11 of these assets. These are not just ordinary assets but powerful tools that can change the course of your financial journey if wielded wisely. Firstly, we have real estate, an age-old trusty asset that has proven to be a reliable wealth generator over time. It's not just about buying properties and selling them. It's about strategic investment and the added value that you build over time. It's about residential properties, commercial properties, rental properties, and even property flipping. Then we have cryptocurrencies, the new age digital asset that has turned the financial world on its head. Bitcoin, Ethereum, and thousands of other cryptocurrencies have provided investors with returns that were unthinkable a few years ago. Are volatile, yes, but they also offer enormous potential for those who understand them. In our list we also have stocks, bonds, mutual funds, and other traditional financial instruments that have been the backbone of wealth generation for decades. They offer stability and a steady stream of income. Intangible assets like patents, copyrights, and trademarks often go unnoticed, but they too carry significant value. Art, antique cars, and other collectibles assets, especially for those with a keen eye for value. And let's not forget about small businesses and startups. Investing in them can yield high returns, provided you know how to pick the right ones. This is just a glimpse of the vast financial landscape that we will navigate in this video. We have a lot to cover and not a moment to waste. Let's dive into these 11 assets. The first asset on our list is real estate. This particular investment approach is layered, complex, yet intriguingly captivating. It's more than just bricks and mortar. It is an avenue where wealth is fostered and multiplied over time. It's a platform that permits continuous income flow via property rentals gains through property value appreciation. Delving deeper into this topic, real estate is no ordinary asset. It's a multifaceted, versatile investment that can be as dynamic as the investor wants it to be. From commercial spaces to residential properties, from raw lands to rental apartments, it opens up a world of opportunities to those who dare to explore. A real estate investment is not a venture that's traditionally done on a whim. Instead, it is a strategic decision that includes meticulous planning, careful market studies, and an understanding of the property's location, infrastructure, and future potential. It's a financial journey that demands patience and perseverance but promises substantial financial returns. Real estate investing lends itself to diversification. It allows investors to distribute their capital amongst various property types, reducing potential risks and improving the chances of securing steady returns. It offers a safety cushion that not many other investments provide. But like any other investment, real estate is not without its challenges and potential risks. Requires substantial upfront capital, and sometimes the property may not appreciate as anticipated. However, with careful planning, research, and risk assessment, these challenges can be mitigated. Despite these potential risks, real estate stands out as a promising asset, a golden ticket that offers investors a broad spectrum opportunities for wealth generation. It's not just about the immediate rental income or the long-term appreciation. It's about the journey towards building a secure financial future through a robust and reliable investment estate, when done correctly, can be a powerful tool for wealth creation. Next up we have stocks. This term might sound very familiar to you, but what exactly are stocks? Let's delve a little deeper into the world of stocks. Stocks are generally described as shares in a company's profits, typically earned through dividends and capital gains. A stock represents a claim on part of a company's assets and earnings. As you acquire more stocks, your ownership stake in the company becomes greater. Simply put, owning a stock in a company means you have a share in its successes and failures, in proportion to the number of stocks you hold. However, investing in stocks isn't as simple as it may sound. It is not a mere bet. It demands thorough research and a keen understanding of the market trends and dynamics. An investor must study the company's profile, its past performance, future projects. Moreover, it also requires strategic risk management skills to survive in this thrilling yet potentially rewarding area of investment. While the world of stocks may seem intimidating at first, it also promises high returns. It provides an opportunity for financial growth to those who dare to venture into it. After all, no risk, no gain, right? However, it is essential to remember that investing in stocks requires both knowledge and patience. Stocks are not a get-rich-quick scheme, offering substantial financial rewards. Stocks require knowledge and patience, but can yield significant returns. Stock investment is undoubtedly a journey. Is this journey that can lead you to financial freedom? The third asset is bonds. Bonds are a type of investment that often play a significant role in any well-rounded investment portfolio. They offer a level of stability that is often sought after by many investors, particularly those who are more risk-averse. This stability comes from the fact that bonds are known for offering reliable returns over time. Bonds are essentially loans that investors make to entities, typically corporations or governments, who need to borrow money. In return for lending this money, investors receive interest payments over a specified period of time. At the end of this time period, the bond reaches what is known as its maturity date, and the initial amount period, the bond reaches what is known as its maturity date, and the initial amount loaned is returned to the investor. This steady stream of income is one of the reasons why bonds are often considered less risky than other forms of investment such as stocks. Stocks have the potential for high returns, but their value can also fluctuate greatly, leading to potential losses. Bonds, on the other hand, promise a fixed return, providing a buffer against this kind of volatility. Furthermore, the stability offered by bonds isn't just beneficial for individual investors, it also plays a key role in the broader financial sector. The bond market helps of funding for corporations and governments alike. However, it's important to note that while bonds provide a level of security, they are not entirely risk-free. Like all investments, purchasing bonds involves a degree of risk. The risk primarily comes from the possibility that the entity borrowing the money may fail to make their scheduled payments or return the initial investment at maturity. But despite these potential risks, bonds are a crucial part of a well-diversified portfolio. They offer a balance between risk and reward, providing a safety net that can help to offset the potential losses that may. Next, we have mutual funds, a term that you might have heard numerous times but may not truly understand the depth of. They are not just investments, they are a gateway for many to the world of finance and wealth creation. So, what exactly are they? To put it plainly, mutual funds are financial instruments that pool together the money from various investors. This pool of funds is then entrusted to a professional fund manager. This manager, with his or her extensive knowledge and experience in the field of finance, invests this pooled money into a variety of assets. These assets could range from equities and bonds to commodities could range from equities and bonds to commodities and money market instruments. The key here, and one of the most attractive components of mutual funds, is the diversity. Imagine if you were to invest on your own, the amount of research required, the knowledge you need to have about each asset, and the time you need to dedicate. It can quickly become overwhelming. But when you invest in mutual funds, your investment is diversified across a wide range, only manages the risk, but also increases the potential for returns. It's a type of investment where you can contribute a small amount of money and get a piece of a large investment pie. This becomes an opportunity to invest in a wide range of assets that you might not have access to as an individual investor. This explains exactly why mutual funds can be an excellent choice for those who prefer a hands-off investment approach. They for profit, but also time efficiency and professional guidance. You get the benefits of a managed portfolio without having to handle the intricacies of investment yourself. The asset is business ownership. This profound statement bears the weight of countless success stories, as well as numerous tales of struggle and resilience. It encapsulates a concept that forms the cornerstone of entrepreneurial pursuits worldwide, representative of a path chosen by visionaries, risk-takers, and unwavering desire to create and innovate. Embarking on the journey of business ownership is no small feat. It demands an unparalleled sense of dedication, a trait characteristic of individuals willing to invest time, energy, and resources into their enterprise. The journey can be long, arduous, and filled with challenges, yet it is the burning dedication of the business owner that fuels the drive obstacles, and to continually strive for growth and improvement. Similarly critical is the attribute of risk tolerance. The realm of business is rife with uncertainties, fluctuating market conditions, and unexpected hurdles. To own a business is to willingly embrace these risks, to understand that failures and setbacks are integral components of the journey, and to view them as opportunities for learning, adaptation, and growth. Risk tolerance thus stands as a testament to the courage and resilience of the business owner. Integral to successful business ownership is business acumen, a keen understanding of the market landscape, including consumer behavior, competition, and financial management. It's the ability to make strategic decisions, to identify potential opportunities, and to foresee challenges. Business acumen enables the entrepreneur to navigate through the complex world of business, and it is this essential skill that often differentiates a thriving business from a struggling one. Business ownership, while demanding, has the potential to offer high returns, both in a financial and personal sense. The journey can be incredibly. The thrill of seeing a business grow from a mere idea to a successful venture. The satisfaction derived from creating employment opportunities and contributing positively to the economy. Owning a business is not for everyone, but it can be incredibly rewarding for those who succeed. Indeed, it is a challenging path, yet one filled with immense potential for personal growth, financial success, and a profound. Next on our list is intellectual property. This term may seem complex, but it is fairly straightforward once you delve into it. In essence, it refers to creations of the mind like inventions, literary and artistic works, designs, symbols, images, and names used in commerce. These creations, when protected through legal means, become an essential part of the assets owned by individuals or businesses. It includes, but is not limited to, patents, trademarks, and copyrights. Patents, as we know it, protect an invention or process that displays a new way of doing something, or offers a new technical solution to a problem. Trademarks, on the other hand, are distinctive signs or symbols used by businesses to distinguish their products or services from those of other entities. And copyrights, which hold a realm of its own, protect original works of authorship, including literature, music, and art. Each of these components of intellectual property is licensed to generate income. In today's competitive business landscape, the importance of this doesn't go amiss. In fact, companies invest a significant amount of resources to protect their intellectual properties. Licensing these properties, they not only ensure their exclusivity but also create avenues to monetize. For instance, a patent owner can license his invention to a company, allowing the company to manufacture, sell, or use the invention in exchange for royalty payments. Similarly, a trademark owner can license his trademark to another business, enabling that business to utilize the trademark in its operations in return for a licensing fee. So, no matter what form it takes, intellectual property can turn ideas into income. It is the driving force of innovation in the modern world, paving the way for new inventions, inspiring creativity. The seventh asset is precious metals and gems. What makes them unique, you may ask? Well, they carry a timeless charm, a physical form of wealth that you can touch, feel, and even wear. Their tangibility is what sets them apart from most other assets. You can hold a gold bar in your hand or wear a diamond on your finger, giving a sense of security and stability that is hard to find with intangible assets. They are also incredibly durable. A gold bar can sit in a vault for hundreds, even thousands of years, and still maintain its luster and value. Diamonds are one of the hardest substances on Earth, a symbol of endurance and longevity. These are not fleeting investments that vanish with a market dip. They are solid, they are reliable, they are there for the long haul. Over centuries, mankind has been drawn to the allure of precious metals and gems. Gold, silver, diamonds, rubies, emeralds, and more have been used as a store of value and a symbol of wealth and power. They have of wars and the foundation of empires. This historical significance contributes to their enduring popularity as an investment. Their value, moreover, often increases over time. Gold and silver prices fluctuate, yes, but they have an overall upward trend. The same is true for most precious gems. They are not immune to market forces, but their value remains strong over time. In addition, they offer a hedge against inflation and economic instability. In uncertain times, investors often turn to gold and other precious metals as a safe haven. This shows their resilience and the confidence that people place in them. Precious metals and gems are a shining example of wealth that stands the test of time. They are not just assets, they are a testament to the enduring allure of tangible wealth, a beacon of stability in an ever-changing financial landscape. Next up, we have cryptocurrency. Let's delve into its nuanced definition. Cryptocurrency, at its core, is a form of digital currency that relies on the principles of cryptography. Cryptography, the art of writing or solving codes, provides the fundamental security infrastructure that protects the integrity and anonymity of the transactions. The technology underpinning this system is decentralized, which means no central authority or institution governs it, offering an innovative approach to the traditional concept of monetary governance. However, this decentralization can be a double-edged sword as it renders the system highly volatile. Economic stability often relies on the ability of centralized to intervene in the market. With cryptocurrencies, this safety net doesn't exist. Their value can fluctuate wildly, sometimes within mere minutes, leaving investors at the mercy of the market's ebb and flow. On top of this, the world of cryptocurrency remains, to a large extent, unregulated. This lack of regulation injects a degree of uncertainty, and potential investors it has proven difficult for governments and regulatory bodies to implement effective regulations and control measures. Nonetheless, this new frontier in finance, teeming with both opportunities and risks, is attracting a people willing to navigate its uncharted waters. The world is gradually acknowledging the potential of cryptocurrencies as it continues to disrupt traditional financial systems and create novel ways of doing commerce. Cryptocurrency is a new frontier in finance filled with opportunities, and the ninth asset is commodities. These are the basic items of commerce that are often used as inputs in the production of other goods or services. They are typically characterized as fungible, meaning that any given unit of the commodity is identical as fungible, meaning that any given unit of the commodity corn and soybeans, energy sources like oil, gas and uranium, and precious metals like gold. Appeal of commodities as an investment lies in their necessity and ubiquity. They are the raw materials that fuel our modern world. When you heat your home, you're using a commodity. When you fill car with gas, you're using a commodity. When you eat a sandwich, you're consuming commodities. Commodities provide a unique way to diversify an investment portfolio beyond traditional securities. Unlike stocks and bonds, commodities often move in opposition to stocks and bonds, and in times of market uncertainty, they can provide a safe haven for investors. In addition to diversification, commodities also provide a hedge against inflation. When the cost of goods and services increase, the price of commodities generally rises as well. This can offset with advancements in technology and the advent of commodity ETFs. It has become easier than ever for individual investors to add commodities to their portfolios. These ETFs track the price of a commodity or basket of commodities, providing easier access to this asset class. Commodities are a staple in any well-diversified portfolio. The reasons for this are clear. They offer both diversification and a hedge against inflation, making them a critical part of a balanced investment. Next, we have art and collectibles. The world of art and collectibles is vast and diverse, offering a multitude of opportunities to individuals with an aesthetic sense and investment insight. This category includes a range of items like paintings, sculptures, vintage jewelry, rare coins, first edition books, and so much more. Each piece holds a story, a sliver of history that resonates with beauty, culture, and occasionally, intrigue. Art and collectibles not only serve as a testament to human creativity and craftsmanship, but they also have the capacity to bring emotional satisfaction. They can ignite a passion, evoke nostalgia, or simply bring joy. The beauty of a well-crafted piece of art or a rare collectible often transcends its material worth, making it priceless to the right collector. But the appeal of art and collectibles extends beyond the emotional domain. They have significant financial potential too. With a discerning eye and a well-informed mind, one can recognize the potential for value appreciation in certain pieces. The value of art and collectibles often increases choose to sell. Building a well-rounded investment portfolio can feel like a challenging task. However, including art and collectibles can make it not only diversified but also personal and enjoyable. The investment in art and collectibles isn't just about the money, it's also about investing in your passion and personal interest. A well-chosen painting or a rare collectible can add a touch of sophistication to your investment portfolio. It lends a unique character to your wealth, making it not just a financial asset, but also a personal statement. The world of art and collectibles can blend the practical with the pleasurable, merging financial prudence with personal satisfaction. Art and collectibles can add a touch of class and fun to. So there you have it. Those are the 11 assets the rich use to achieve financial freedom. Let's dive deeper into each of these to understand better how they operate. Real estate, the most traditional form of investment for wealth generation, involves buying, selling, or renting out properties. Stocks, another popular choice for the affluent, are essentially shares of a company. Investing in stocks means taking a small piece of ownership in a company, with the hope that as the company grows, so too will your investment. Bonds, typically issued by governments or corporations, are a type of loan given by an investor to a borrower. Mutual funds are a pool of various investments managed by a professional used to diversify your portfolio. Businesses can be a source of continuous income. Many wealthy individuals own businesses or have stakes in various companies, reaping the profits generated by these enterprises. Intellectual property including patents, copyrights, and trademarks, can be a lucrative asset, yielding high returns when properly managed. Precious metals and gems like gold and diamonds hold intrinsic, the new kid on the block, has recently gained popularity among investors due to its high potential returns. Still, it comes with its risks, including high volatility. Commodities, such as oil and agricultural products, can be an excellent choice for diversification. Lastly, art, considered a passion investment, can appreciate over time and offer substantial returns. Remember, the journey to financial freedom is a marathon, not a sprint. So keep learning, keep investing, and keep growing.